Hey everyone, Happy New Year. I hope this entertains you on your holidays. If it does, a late Merry Christmas like and subscribe would be nice. Now, for those following along, you are probably starting to notice a trend forming with my investments that I like, and that is that they could be described as serial acquirers. We've got Technion, SDI Group, Kelly Partners Group, and today we have another to add to my watch list called CSAM Health. Now, if you haven't been following my channel, which is about 20% of the people who will watch this video, I hope you enjoy my style of investing videos, and since you are new, this is what I'm looking for. I'm looking for a company that has a lot of growth with high internal rates of return. I'm looking for companies that have a long runway in front of them, so they're probably going to need to be smallish cap companies. I want them to have great leadership with a high percentage of the management's net worth tied up in the business. And if you know of a business that fits these three things, especially management, sell me on that. Please share it with me. I'll even dig into it for you and give you a little feedback. Please give me a rough elevator pitch though as well. That will help. All right, appreciate that. Now, for those who are just brand new and you're looking to get started, you're going to need a broker. Now, I use Interactive Brokers because the fees are low, they are safe, they give me access to many international markets. There's a link in the description. You can try a demo account for those wanting to get a feel for how it works before opening an account. And just quickly in the description as well, there's a link to a Discord group where you can share that idea that you have with me, and we can chat in there and share it with others in the group. All right, let's jump into CSAM Health now. Now, a big thanks to Partnership Investing on Twitter for uncovering this one. Please follow him for the full write-up and a lot more information. So, for those who are interested in serial acquirers like me, there's a Norwegian company called CSAM and is following this Constellation software, maybe Teledyne playbook. Now, I've talked with the guys running the company, and they are just really good, smart people. I don't have the interview recorded, as they were just happy to have a casual conversation rather than me publishing it on YouTube, and I have no issues with that, but it means I can't share with you how great these guys are. They don't take themselves too seriously and are working toward a dominant specialized health software conglomerate. It's a tiny business at the moment, less than 100 million USD in market cap. That's not that tiny, I guess. Like, I'd be pretty stoked if I had a business that size, but in the grand scheme of the stock market world, it's small. Now, CSAM are focused on acquiring and growing software in the healthcare world specifically. So instead of being a general acquirer of software like Constellation or Topicus or Vitech, CSAM have niched down deep into healthcare. And this gives them an edge for the bigger serial acquirers because they have this intimate knowledge of the space. And they've said that there's probably around about 300 acquisition targets that they're really focused on trying to get. Now, one of the things I really love about this business is they have a large and growing part of the business is in recurring revenues from like government contracts. And these are typically very sticky and long-term in nature. I think churn rates are well below 2%. This is really crucial to the investment and gives a lot of protection to the downside. See, the software is just really critical to government health facilities like hospitals, so it's extremely sticky. Over 80% of the business is recurring revenue. So here is a direct passage from Sverre Flatby, the CEO. So CSAM continues to deliver on its strategy, and in times of macroeconomic uncertainty, the predictability that comes from our long-term customer relationships allows us to keep a steady course towards our Norwegian kroner 1 billion goal in 2025. So 82% of the total revenue this quarter is recurring, and with 92% gross margin, the backbone of our business is gradually getting stronger. Most buy, integrate, and build integration projects will be finished by the end of Q2 2023, and subsequently we expect 30% EBITDA target margin to be restored exiting Q3 2023. Now let me explain this buy, integrate, and build model. This is a bit like Teledyne, for those familiar with that amazing business. See, CSAM doesn't acquire profitable or amazing software businesses, unlike Constellation or Vitech or most other serial acquirers. See, CSAM find these critical software businesses that might not be making much money at all. And what they do is they aim to acquire them at, say, 2x sales. Then work over a 2-year structured turnaround program to get these businesses leaner and operating with 30% EBITDA margins. They cut out high luxury expenses and optimize wherever they can. Each acquisition is targeted because CSAM are confident they can get to this 30% EBITDA margin in 2 years' time. So when CSAM make a few acquisitions, it takes a few years for these acquisitions to really show up on the bottom line of the business. Now, this inherently makes the business a higher risk play compared to a normal serial acquirer because CSAM have to do a lot of work. But as it pays off, it becomes this fantastic business just like Teledyne did. And just like Teledyne, it's going to come down to just exceptional execution. Now, regarding CSAM, they have been doing this for over a decade now, which gives me confidence that they can continue doing this further. And because they have been doing it for a long time, they have diversified across many niches, so this makes them more stable. And it's not a startup anymore. Now, there are things I don't like about the business. I don't like that they're not profitable yet, and I don't like that they issue stock as part of new acquisitions. But being small, this is kind of what needs to be done, and I get it. It is how a lot of serial acquirers get going. But structurally and philosophically, they are following the combination of maybe Constellation Software and Teledyne. And that's exciting because that's something I'm really looking for, is if anything could repeat something that those two companies have done, this is going to be a fantastic investment. Now, since execution is so important to this model, focusing on the management team is obviously critical. And I couldn't speak more highly of Sverre and Einar, the CEO and CFO respectively at CSAM. These are great down-to-earth guys with a real focus and love for growing their business. It's probably the biggest reason I like this business. Now, something that I think is interesting in the quarterly reports is that Sverre likes to highlight their really long-term relationships and their long-term clients. Here on this slide, you can see they've had a few clients there, like the Oslo University, have been clients for over 20 years now. They've got some clients that are over 10 years running as well. So I think it's good to see that they're having clients that are hanging around for really long periods of time, and that's going to be really important to this business. Now, jumping to page 14 of this document, I think this is something that Sverre and Einar have just sort of been tweaking with in the last year. This is very Constellation Software, and what they're doing is they're kind of separating their business into silos. So specific areas like medication management, and then the women's and children's health segment, and medical imaging. They're all going to be these different silos where they're going to have a manager running each of these kind of areas and running with them and having a decentralized ownership in that particular business. So instead of having a heavy head office with lots of management decisions needing to be made, we've got many sort of subsidiary businesses managing lots of different software in that particular niche. It's very Constellation Software. It's actually exactly how they explained it to me. Einar even said, we're shameless cloners, and Constellation Software's model is probably the best in the game at this, and they're literally following the playbook. And if we go look at now at page 20, we can look at their recurring software revenues and how they're been increasing. So for the last 12 months, it's grown about 21% of their recurring revenues. And look, this chart shows you how this starts to compound over time. I think that's really important. And the last slide I wanted to show was how management have quite a lot of, well, they even say here, skin in the game. Management have around about 30% of the pie, and the rest of the 70% of external investors are coming from mostly Scandinavian countries, 25% from the US as well. It doesn't show Australia in here, or maybe I'm considered Republic of Georgia, but hopefully I can get a little slither of this at some point. Okay, so it's important, we've got to talk about the risks. So the first risk is bad acquisitions. Now, deals that look good but just don't deliver as expected, this hurts their return on invested capital and the growth of the business. It's going to be value destructive. This is a very key risk because turning around software businesses takes a lot of skill and execution, and it's not a guaranteed process at all. The next big risk is increased competition to their subsidiaries. Obviously a risk for all businesses, especially serial acquirers, and is why I like to see a diverse group of businesses to reduce the exposure to something bad happening in one particular niche. Then of course a big risk with staffing. See, if something happens to Sverre or Einar or anyone in management or anyone at the subsidiary level, finding good people is hard, as we all know, but finding a toxic person that erodes the culture can be far worse. So good hiring is always going to be important. And I do think these are pretty standard across the serial acquirers, except with the added risk of turnarounds being harder than just being profitable, stable businesses like Technion and Constellation Software. This is a bit harder. Now, the good thing about CSAM is that they are very unaffected by macro factors. Like, do you think the Oslo hospital is going to stop using patient medical software? I highly doubt it. All right, now valuation does get a bit tricky. I don't normally try to value unprofitable companies, and I don't often get to this stage of my analysis. So I have to figure out a valuation ballpark. So here is my attempt. And remember, this isn't normally how I do things, so please do it your own way. So the goal is to have 30% EBITDA margins and 1 billion Norwegian kroner in revenue by 2025. So let's say a few things happen and they don't quite get there. Let's assume they only get 800 million by 2025. That's 3 years away. Maybe margins are more like 25%, not 30%, because the few acquisitions that take a bit longer to develop, or they're buying a handful more or something. For look, a well-run, growing compounded serial acquirer software company, I could give them maybe a 20x multiple. I don't think that's a stretch. So 800 million revenue at 25% margins is 200 million. Put a 20x multiple on that. That gives me 4 billion Norwegian kroner. So that's about 5x from here in just 3 years. So what, 70% per annum? And that calculation was done considering they're not going to hit their targets perfectly. But please remember the negatives. They are still in an unprofitable growth mode situation. They still issue stock for acquisitions. And actually right now they are buying back stock in anticipation that they will need to issue stock for future acquisitions. This is fine as long as the stock price is okay, and that is the risk. Another thing that I haven't mentioned is that they have corporate bonds which will need to be refinanced in the future. This will no doubt be at higher interest rates than previously, so this is going to hurt margins. And they still have to execute on this buy, integrate, and build model, and that isn't easy. So if I was going to be wrong about CSAM, it would likely be in their ability to repeatedly integrate acquisitions and raise these margins. I'm confident that they have demonstrated the ability to get this done and are true owner-operators. I'd also be wrong if customers weren't as sticky as I first thought. So there you have it. Do your own work on this. Tell me what you think. I'm very interested in this one and still have some work to do, but I do understand what is going on, and I see a lot of Constellation and Teledyne in this, and it's attached to great people. And that does make me pretty comfortable. Now, if you do want to talk more about this one, please join my Discord group in the description. Share an idea with me if you've got one. We can chat in there. Thanks for staying to the end, and I will see you next time.